Hi guys, and in today's video we're going to talk about an update on stock results and general results from some private companies and my views on what I think is happening and could happen. Starting with CakeBox, they announced that they're going to be on track, and that was a week or two ago, and the stock went up a lot. I think it was like 10% in a day or something, but then it fell back. It's still at about 6% dividends. This could be a lifetime chance to get it cheaply, because in 5-10 years, they've raised their dividends every year. You could be getting 10-20% in 5-10 years. I've seen this happen before for long-term investments. When you buy it at a good rate and the dividends keep going up every year, you get a monster dividend in 4 to 5 years, and suddenly you're getting 20%, 30% dividends on the investment you made 5 years ago, which is incredible without any stock price growth. That's what I think could happen with CakeBox. They're going to keep earning throughout this recession. They're going to keep growing, and I think they're going to do very well. NatWest results, they're pretty damn good, to be honest. So in the previous videos, I'm not sure I published it or not, but I basically said that banks are going to make all of the money. If you're struggling as a consumer, as a business, doesn't matter. There'll be loans, and people will need to pay the bank their money. I've thought that NatWest was going to do quite well. Let's have a quick look at this results. Strong earnings, up 50% for a big company. Earnings up 50% is a big deal. Warren Buffett looks for 12% earnings growth. Attributable profit in Q1 of 2022 for 2023, it's up nearly double. 1.3 billion versus 0.8 billion. Return on equity up from 11% to 19.8%. So return on equity is doubled year on year. This is really, really good growth. What else have we got? Let's look at some other stuff. Strong capital generation. The dividend is up as well, looks like. And they're buying back shares at a fast clip. 450 million worth of a 800 million buyback. They're buying their own shares almost every single day. They think they're undervalued. I think they're undervalued too. I've already made a decent gain, 20-30% gain on NatWest. I sold actually recently, but I'm thinking of buying again. I think actually options for NatWest would work really well. Anyway, CakeBox doing very well, at least from a business perspective. It's not necessarily reflected in the share price. NatWest, bigger company, potential to do things like options and things like that. Profits up incredible. It's just insane how much they're going up. They're not going to do badly in this recession. They're going to do very, very well. Profits, revenue, everything's going to go through the roof for NatWest. Moving on, we're now on to something else that I predicted, which is a reclassification of Revolut. So Molten Ventures owner, the portfolio company owner in Revolut, recently slashed its valuation from key investor Schroders, and it was cut in half, from 33 billion to 17.7 billion. I did a video on this a few months ago saying that some fintechs were grossly overvalued. Do I think that 17 billion for Revolut is still overvalued? You're damn right I do. They're not making that much money at all, and I see their ads about trying to get kids on current accounts. Yeah, that's a long-term play, I guess. Banks don't make that much money at all from savings accounts or even credit cards. In most cases, they're loss leaders. I don't think Revolut is going to do well at all. Certainly not at that valuation anyway. What else is happening? Property. Somebody asked me to do some more videos about property. I think the property market is having its last hurrah. I think that there's, agents have been talking about more interest in the property market. At the same time, interest rates are going up. Remember that I predicted 4 to 6% interest rates when all the other economists around the world were talking about 2%, and they were talking about transitory inflation in 2021. Obviously I predicted long-term inflation in 2020 and 2021. We are where we are. Where are we? Interest rates are continuing to increase. People are not able to buy the properties they want to buy. I was in Sainsbury's yesterday. The cashier has a house. She's working 10 hours a week. She's got a house worth 400k. You know, I work for big companies. I've just finished working for Facebook and WhatsApp, right? These bad boys. And, you know, we don't earn badly, me and my wife, and we can't afford a house. I'd probably need to earn a house that we want, at least. I'd probably need to earn 200,000, and I'm a bit away from 200,000 as a couple. So I think there's something wrong with the property market. I think that is going to decrease. I think we could be looking at a big correction. In terms of property investment, I have some property investments. I have one in the Midlands. I bought this as a residential, and I've got one which is kind of quasi investment, quasi residential in East London. That seems to have done the best. I think there is, in some markets, local markets in the UK and probably around the world, there is a saturation of landlords. I think landlords have started to sell, certainly in the UK, off the back of increased regulation, increased pressure from the laws that change where they can't offset mortgages, as well as mortgage interest rate rises is causing pressure on landlords. A lot of landlords won't be profitable anymore, so they will be selling. Individual families are going to struggle as well. They can't, if their mortgage doubles, and they're not doubling their income, how are they going to afford everything? So I've said this before, I think there's going to be a correction in the housing market. I think there's going to be a correction in the stock market. All of those factors, that the share of wallets of how much disposable income families, small businessmen have, property investors, you know, just the general person in the street, even renters, has gone down. They're spending more money on rent, more money on their mortgage, more money on bills. That means disposable income is going down. That means income for companies that are not classed as essential is going down. Who makes the money? The banks. The banks are getting the money from the mortgages, right? Even if you're a landlord, yes, you're getting money from tenants, but you have to pay it to the bank. That's why NatWest is doing so well. CakeBox, people don't want to, they don't want to cut back on birthdays. In fact, it's my birthday today. And I don't want to cut back on my birthday. Everyone wants to celebrate the birthday, no matter how young or old they are. If they have children, even more so, you want to splash out, you want to buy cake, etc. So I do think it's a slightly strange market when you've got really strong companies like Tortilla and CakeBox and NatWest, you know, doing well, likely to do very well in the coming months, years, etc. And their stock prices are depressed or suppressed. And then you have these big companies like Revolut that aren't making any money, and they're valued in the tens of billions. So I think that's slightly unusual. I think there will be opportunities to make money in the equities markets as well as real estate, but you have to be very canny about how you do it because of interest rate rises. So your margins have to be much wider, and I think that the risk appetite has to be higher. Voids have to be decreased, so you have to find ways to do that. Probably have to have incredibly unique, innovative indoor decorations, or maybe a very good location, or other services that you can provide. I think the vanilla buy-to-let market around the world, certainly in the UK, is going to dry up, and you're probably going to be left with more professional landlords and nuanced offerings. I know service accommodation has taken off a little bit, but I think that's likely to be regulated at some point in the future. So I think watch this space about property. I think something's going to really happen in the next kind of 6 to 18 months. I think there could be a big correction that'll leave a lot of people, with their pants down as the tide goes out, if you like, as what Warren Buffett says. And I think a lot of people will struggle to pay their mortgages. I'm going to leave it there. I don't normally do these wrap-up videos because I don't think it necessarily appeals to a broad audience, talking about lots of different things. But nevertheless, it is my birthday, and I had a great birthday present today. Actually, I got a new client that I'm going to be doing some go-to-market strategies for and marketing acquisition strategies for, which is fantastic work that I find very simple and easy, but work that not many other people can do well. So that was a great birthday present, and I'm looking forward to today. Guys, I really hope you enjoy this video. If you do, smash the like button and subscribe. Check out my other videos that I talk about listed equities like NatWest and CakeBox, as well as private equity and venture capital angel investing like Revolut and other fintechs, etc. Guys, remember, knowledge is power, especially the right kind of knowledge, and progress is everything. I'll see you guys in the next upcoming video, which is one of these, which I'm sure you'll find helpful. Take care.